Welcome to the Market Huddle Plus. I'm Kevin Muir, and we have a real treat. Returning to the show is a fan favorite. Just loved across the board. Everyone tells me that they got to tune in when Vincent comes on. Vincent Deluard. He is the director of global macro at StoneX. Vincent, thanks for making time for us.
Always a pleasure. Great to catch up.
Yeah, so the reason we're doing this is you were chatting and you were a little bit negative on the market, and you were saying you were like getting some booze. And I feel the same way. Like people are we're showing a little bit of the concerns that we have out there, and people are saying we don't just get it and stuff like that. But if I recall, Vincent, you were one of the most bullish guys out there for the longest time. So it's not like you're always bearish or that you think it's specifically this thing. You've been bullish, and now you're saying that there's some risks. I'd love to hear kind of your story.
No, so where are you? And in a way, it reassures me a bit to see I feel like, 2-3 years ago, we were the only kind of lone bulls. The consensus was that the U.S. economy was falling into recession, that the Fed had hiked too much, that, Bloomberg had his famous article with 100% probably a recession. And, guys like you and I who focus more on really the fiscal side of things, we saw this, accelerating economy. And yeah, we're right. I mean, it's growth. We had basically eight straight quarters of 3% real GDP growth. Inflation is still nowhere near the 2% target, but I hear it's getting there any day now. So I'm not worried about that anymore. And yeah, I feel like, surely on some psychological level, the election had something to do with it. But I've seen this giant vibe shift from just. Remember 6 months ago, we had this whole insanity about the SAM rule and the Fed. Like, why they cut by 50 basis points in September? Like, you do that when, but of course, now in hindsight, it was a mistake. But at the time, everybody thought, some people said, they should have done 75 basis points.
Yeah. Remember that that professor on CNBC screaming that they needed to do an emergency 75 basis point cut.
Yes.
And he was freaked out. He thought this was like, long-term capital redux.
Yes.
And it was absolutely crazy.
Yes. And now it's the exact opposite, right? Everybody is, fully, completely bullish on especially U.S. growth. And the weird thing is part of my caution, at least on the economy now, comes from some of the arguments that some of the recessionistas were making 2-3 years ago.
Right.
I don't think monetary policy is entirely relevant. Like I'm not like a Warren Mosler or
right.
Like I do think that if you're going to jack up like the Fed funds rate by 500 basis points, eventually you're going to slow down construction. Eventually you're going to raise borrowing costs, and I think we are seeing some of that in the data already. Like I was just looking at the job opening for construction sector.
Right.
It's very low, right? We know that the construction sector is going to flip from adding about 20,000 jobs a month to shrinking 10,000 jobs a month. We know that all the debt that was issued in 2020, 1.5% is going to have to be refinanced. And yes, spreads are tight, but you still have about 500 basis point extra. So margins are going to come down eventually. If we let the economy alone, which I say in this environment, but I think its natural path would be to slow.
Yeah. And I think the other thing that people are missing, and you were the one who put me onto this, is you found that terrific chart of the state spending. Like, everyone focuses on the federal deficit, but the reality is that it takes a while for that money to get out there and to get through the system. And,
absolutely.
And you have that terrific chart that I think is the most important chart of 2025.
Oh, thank you. Yeah. So I'll jump into another one, but first for the benefit of the audience, yes, I in general, and especially now, I think we spend far too much time worrying about the central government, which is fairly uninteresting, right? 85% is things that you can't touch. Right. And then even the 15% practically doesn't change all that much. Whenever we think of the functions of government, who pays the teacher, who builds the road, who pays the firefighters, this is all local government, right? And we had this really, 4-year bonanza in state and local government spending, which I think was a big part for the resilience of the economy. And part of that was COVID money filtering through. Then it was the stimulus, the big infrastructure bill. Then also the tax collection boom, right? I mean, because that's the beauty of fiscal spending, right? You spend money, the economy grows, then you have more taxes, and you can spend more.
Right.
Unfortunately, we're really getting towards the end of that cycle, in large part because many states have cut taxes quite aggressively in the past 2 years, and states cannot run deficits. So if you cut taxes 1 year, well, you're going to have to cut spending. So we're going to go from 10% plus growth in state and local government spending to 5% decline, which, it's going to be a significant amount. The other, my other case for a fiscal tightening in 2025 is not, I mean, who knows? Doge may be a thing. I don't know. I don't think it will be, but whatever. I think we spend too much time on Doge and not enough time on things that matter a lot more, which are inflation adjustments.
Okay.
So in the US, we have Social Security, right, is adjusted on inflation. You have every November they announce what's called the cost of living adjustment, and it's going to be the extra money that you get to make up for the increase. It's a CPI slightly different CPI than the one that they use. It's always part of that boomer conspiracy to always squeeze a bit more, but generally it's pretty close to CPI. Okay. So for example, in 2023, we're feeding off of that peak of inflation at 9%, and the cost of living adjustment was something like 8.7% that they got starting on January 2023. Now you could see, when that check arrived, you could see that the cruise line stock started to take off.
Oh wow, that's wild.
Yeah, because you get basically your 67, 70 million if you include disability people are on Social Security, right? And then you get like 8-9%, and realized inflation in 2023 was much lower than that. So there was a hidden 5 to 6% boost
in real terms
to their income, right? So that's one channel. Another channel goes through federal salaries. You have this thing called the general schedule. If you're a government employee, like the grid kind of goes up, everybody's salary is lifted. So all the federal employees and some federal contractors are on that. And then the third channel through which that works is tax bracket, right? The IRS adjusts the tax bracket, because otherwise with inflation, everybody would experience called bracket creep, right? You don't make any more, the price of everything goes up and you get into higher brackets. Right. So these are three important adjustments that affect, I mean, if we think about the income tax bracket, that really affects everybody in the US economy. And it's adjusted based on backward looking inflation. Now, when inflation is stable at 2%, that doesn't matter, right? Yeah. But when you have this massive volatility inflation, which is what we had since COVID, that can create hidden stimulus and hidden austerity. So when inflation is high and falling, you have a hidden stimulus because you get adjusted backwards. So you get more money than the realized inflation. So you're in the money, and that's where we have been pretty much since that peak inflation of June to 2022. Now the reverse is true if, as I believe, we have experienced the bottom of inflation about 2 months ago. And now I think the cost of living adjustment is around 2.5% for this year. Okay. My guess is that CPI in 2025 is going to be more than 2.5%. Right. As a result, you get this is the fastest growing segment of the US population, and the one the highest disposable income are retirees. Instead of getting very elevated real wage gains, they're getting real wage cuts. And the same goes for government employee and everybody really who pays income tax, which is pretty much everyone in the US. So all of that makes me think that we're going to have fiscal retrenchment in the US, not because of active policy. I don't know what policy will be. I think it's a fool's errand to try to predict. It changes every day. But these are like structural forces. That means that if you think about your fiscal impulse, it's going to be negative in 2025. And I know you and I both believe that. I mean, it's not a belief, it's an accounting reality that the deficit of the public sector are the profits of the private sector. So I think a lot of that boom in private profits that we had since COVID was just the flip side of this massive fiscal expansion. And if we want to experience some sort of contraction on the fiscal side, it follows that we'll see a contraction in profits.
That's fascinating. I completely agree. And this is also coming at a time, as you mentioned, the Doge is trying to cut back on their spending. And let's face it, at the very least, they're not going to increase spending, right?
Yeah.
So you have to argue that it's difficult to measure how much they're going to cut, but they're going to be cutting. And so then we also have this, the pig and the python in terms of this fiscal stuff, in terms of like the IRA and the CHIPS Act that have finally worked its way through. And so we're sitting here and we were looking at it and you're like, oh, geez, the fiscal is going to go from this tailwind to this huge headwind. So now my question to you is, how do you position your portfolio to take advantage of that? Because I'm kind of stuck, because I'm sitting here thinking, okay, I could make an argument that the economy is going to slow down. But at the same time, I think that inflation is going to be sticky. And in fact, the tariffs might, if they get put in place, might be inflationary. So how do you kind of deal with this push, slowing down in the economy and yet increasing in inflation?
I mean, that's exactly my base case, right? I'm still not in the recession camp, because I think it's going to be hard. I mean, even though that impulse is negative, the deficit is so big, the Fed is so reactive. I think changes have happened to the structure of the economy that makes it harder. So I'm not expecting a recession, but
okay, here before you go further, what would it take to get you into the recession camp? Like if you found out the Doge was actually being more successful, if they were gonna if you came out and said,
if we had legit austerity in the US, like $1 trillion cut, I mean, and that's just the way. Now you can make a case that it's necessary, right?
I understand.
Whatever, like Argentina. I'm not making an ideological case about the value of public spending and what level of government spending is optimal economy. I'm just saying that at any given point, GDP is the sum of private consumption, investment, net export, and net government spending. So if you shrink one, you're gonna shrink GDP. So yes, that would be the case. But
isn't it ironic? Oh, sorry, I didn't mean to interrupt. But Vincent, isn't it ironic that people think that we need to cut the deficit to actually save the economy? And in some ways, yes, maybe over the long run, it is going to save the economy, but over the short run, it's actually going to create like a negative economic result that will probably result in stocks going down.
Yeah, I mean, just we've running this. The funny thing is, we run this experiment almost every year in a different country, right? I mean, for much of the past decade, we run that in Greece, and we cut, and you can make the case that it was warranted, and that the Greek government was a bunch of very inefficient, highly paid, and sometimes corrupt people doing very little, and that you had to cut some of that. But I mean, Greek GDP contracted by 30%.
Right.
And I mean, they got it back. Like, they have a primary surplus. The debt now trades inside the French. So I mean, everything worked, but the Greek stocks got obliterated, and Greek growth got it went through something that was worse than the U.S. Great Depression. So again, be careful what we wish for. I mean, I get this kind of Millet-like libertarian dream, but I don't, and I do believe that there are times in history where it's necessary. Probably Argentina is in that case. Like they went so far off the deep end, but like that process is very painful. I don't think the people who make this argument that we should have these savage cuts in public spending, this is not compatible with the stock market making new all-time highs every day and 3% GDP growth.
Well, and to that point, the reality is that Argentina couldn't fund itself, and that the term premium was infinite in that case. In our case, in the States, for example, the term premium is what, 50 basis points? It's very little. So the benefits from cutting in terms of having lower rates is actually very minimal. And I think that that's part of the, I just listened to Elon Musk talk about this yesterday on one of his spaces, because he's now become a macroeconomist. And he was arguing that, very much like the situation Robert Rubin argued to Clinton in the late 90s, is that, you cut spending and therefore the bond market comes down and everything's better. But rates were a lot higher and the curve was really steep and there was lots of problems. Then we're not experiencing that right now.
Absolutely. I mean, you see that in Argentina, a lot of the improvement in the deficit just comes from lower borrowing costs.
Right.
And which is also one of the reasons why I mean, not to get like, I don't believe the IMF medicine of all you gotta raise interest rates.
It's terrible.
Crisis, no, I mean, especially in a country like Argentina, you're like 50% overnight interest rate. So you just, I mean, Anyway, but yes, yes, no, if we, I mean, but I do you think even we would be cutting spending would get interest rate down in the US? I mean, I'm not even sure that's
Well, I do believe that it would get interest rates down, not in terms of the term premium. I think it would get it down because it would slow the economy and potentially put it into a recession.
yeah.
So it's not the same thing as you're having a funding crisis, and that's the issue. Now, listen, and I know people are going to be like just spitting, on the ground, Vincent, and screaming at us that this is unsustainable and we need to stop spending and we need to fix it. And we're not arguing that. And I think you made that point. You said, I'm not making a philosophical decision, or determination of how much spending. You're just saying very rightly, if we cut spending, it's going to mean lower stock prices.
Yes. Yes.
Right?
And I legitimately do not believe that it's not because, I mean, I have this issue with Trump. It's like, he's got to be smart. Right? I mean, given everything that he's achieved, all the bullets he dodged, all the lawsuits, and he certainly has smart people in his cabinet, right? The Miran, the Lutnick, the Besant. But I'm not sure that Trump himself understands that. Elon, I don't think he does. Or, I mean, I think he kind of has this kind of engineering mindset, and he thinks the government runs like a corporation. And again, I'm not, he sent rockets and I don't. Okay, so he's very, very smart, but I don't think he spent a lot of time studying public accounting. Is my idea, but I don't know if Trump really understands that. It's the same goes when it comes to the tariffs and the idea that we can tariff people, but they still give us their money. I mean, we have all these violation of basic accounting principle, and what strikes me is no one calls him out.
Yeah. Well, what's interesting about that is I've come up with a new kind of mantra in terms of Trump will do what he wants to do until the market, disciplines him. And that was I listened to Hilsenrath, and he very much said that about the bond market. But I think it could be taken even further. I think it'll be the whole stock market.
Okay, because I actually went through the. I was thinking about that too. It's like. And so I went through the Truth Social.
Okay. Yeah.
Actually, no, I went for. I didn't download the whole thing. I have a Twitter account that follows Truth Social.
Okay.
And I was looking for tweets about the stock market from Trump. Or whatever you call them on Truth Social.
Yeah.
And I couldn't find any.
That's true. And
that's you remember 4 years ago, every day it was
every day there was a new high. Everyone was
best president ever. Blah blah blah.
Yeah.
And so. I mean, maybe it's just coincidental. It doesn't mean anything, but maybe the way I was naively reading it was, maybe he knows.
Yeah.
Maybe he knows.
Well, and I might push back a little bit on your comment that Trump and Elon don't understand this, because if you listen, often they'll say there might be some pain involved with the cutting, and you hear that on the Doge especially. There's going to be pain. I think that they might understand it a little better than we think they understand it. I also think that Trump has set up Elon to be the fall guy in terms of when in terms of like, I'll let the billionaire, cut everyone and put everyone out of work. And then when it goes bad, I'm just going to be like, okay, it was like Elon's fault. I shouldn't have cut so much.
That's a very plausible theory.
Okay, let's talk about some of your trades. One of the things that I saw on one of your reports is you had 4 trades if MAGA is successful. And I'd love to kind of just go through your 4 trades and what you think might happen.
Yeah. So my idea there was, okay, my bias is, like I said, it's negative. I think we're going to have a bear market in 2025. And I think it's going to be a stagflationary bear market. So I realize I haven't answered your prior question, so that's why I'm.
Do you want to go ahead and answer it before we get on to the fourth?
It's a short answer. I mean, if you expect stagflation, you're screwed. I mean, there's not much you can do. I mean, gold, I guess, which might be one reason why we see gold just like powering through every day. Is I've over time I've noticed that gold tends to be a really forward-looking Like it rallied way before the Fed started to cut in 2019. Then it did its peak well before the meme stock insanity. It saw the rate hikes of 2022. So I think when the gold market goes up, it's telling you something about the future, that, or maybe it just tells you that China is buying. But my guess is that it's probably pricing something like that. So yes, in a stagflationary environment, I mean, very few things work, right? Because you're basically the stocks get hit by the growth going down, and then the bonds don't rally because inflation is too high and the Fed can't cut. So your 60-40 portfolio really takes a hit from both sides. I mean, it's 2022 basically, and that would be my expectation. And so that's my base case. Now,
before we get on, let's talk about that base case. So do you think it could be as bad as 2022?
Yeah, I mean, 2020 was not. I mean, it was bad for bonds. It was like probably 1 in 200 year type of event for the bond market.
Right.
Stock market is a very run of the mill correction. I mean, did we even barely got over 20%? Is my guess.
Yeah, it wasn't that bad. So this time, would you argue, because we have the yield cushion in terms of the bonds, that it would be more a situation where the stocks hurt more on a 60-40 portfolio?
Yeah, I would guess. Also because we've done we've done the 20 rate hikes, right? So I think in that scenario the Fed would just stay on pause, because one side of the mandate would be, my inflation is not going the right way, but the other side is the labor market is weakening, so they would just kind of stay on pause, and you wouldn't see yields. Yeah, you may even have a wash for bonds, right? Maybe you get 5%. Yeah. I mean, I don't know, how do you see it?
I don't know. We're here to hear you, not me. So let's keep asking you. Were you surprised at how much the yield curve steepened when it came to the Fed cuts? Like the Fed cut 125 basis points, 10s went up 100. A lot of people, bond bears, were just like, holy smokes, they were taken hugely off guard. Were you?
I think there were two things happening. I think that the bond market was just high on this whole Sam rule recession trade, and then there was a realization that it was just not happening, right? So you just expected one thing, and then that thing was wrong, and then you need to reprice. Then there's the other argument is the Fed lost the plot, and I think it's a bit of both. My guess, it's probably more of the repricing of the wrong bet than because I mean, obviously the Fed made that mistake of cutting by 50, but now they kind of correcting, right, by guiding higher and moving the dot plot. So I think we like when people say the Fed has lost the bond market, I'm like, go to a place like Brazil or where things happen, right? It's not the same thing. Like, there was miscalibration for sure. There was miscommunication, but it doesn't strike me as something that was really out of the extraordinary.
Yeah, I completely agree. When we get a term premium of 200, 300, 400 basis points, then you can tell me that the Fed has lost control of the bond market. Until then, this is just noise. One of the things, you're a student of history. This is an interesting time in terms of we have a president that's more willing to talk about what the Fed should do than any time in recent history. Are you worried about it? And do you think it ends badly?
I mean, I'm not a big believer in the fiction that, the central bank independence. And to me, the fiscal policy and monetary policy have always been two sides of the same coin. And, if you take that historical look, I mean, the role of the central bank is to finance the government, and all these apparatus of the independent central bank and the committee and the press conference and the 2% target and the 50 different inflation measures. To me, all that is almost like, the Roman piece doing the opening.
The Kabuki theater, is that what it's called? Something like that.
Kabuki theater too. Yeah. So that's why I never really thought central banks are that independent. And I think we're going back to a more normal, perhaps more brutal, or we don't have the the veil of
Okay.
independence, and then the nice the fig leaf that we
Right.
had before. It's like, like, yeah, I want, why do you want Greenland? Because I want it and I need it.
Yeah.
Why do you want lower rates? Well, because I want lower rates, because that's good for my economy, and that's it. And then you're my employee, you're my payroll, and you're gonna do what I'm gonna do, you what I'm gonna tell you to do. So yeah, I think we are obviously Trump has and I think Trump is also going to be somewhat, the ability of the Fed to resist that
Yeah.
is more limited now than it was in the first mandate for two reasons. One is, I mean, like it or not, Trump was kind of right in 2018. The Fed was over tightening,
Oh yeah.
and when the Fed,
Powell really couldn't putt.
yeah, and then they did that December pivot, and then the stock market, came back, and
Yeah.
2019 was a great year, and there was very little inflation, and so it's objectively it's 1-0 to Trump, and then the Fed scored massive own goals during COVID,
Yeah.
with transitory, and then after that the Samu reset. So their ability to the experts claim to expertise always, I mean, you should never believe, I mean, including including us, but at least we're not setting monetary policy here.
That's right.
So I think the amount of trust that the Fed inspires is probably very low. At the same time, the amount of bullying that Trump can exercise is much higher than it was last mandate. So I do think that, yeah, and that's kind of part of my, I know you have the same view, that we kind of move back towards an age of populism, and yeah, to me that's kind of inflationary over term.
Okay, what does this like? How does that inflationary and this maybe a Fed that's easier translate into a U.S. dollar call? Like right now, it seems like everybody loves the U.S. dollar, the cleanest dirty shirt. If I have to hear that one more time, I'm gonna like just shoot myself in the head. It's my I can't stand that. It's like my least favorite thing. Is this bull market in the dollar long in the tooth? Are we about to roll over, or is it just going to continue, and we're going to have to listen to people talking about drinking milkshakes for the rest of our lives?
Yeah, I share your feeling, and I'm going to keep answering two questions back.
Okay.
Remember when you asked me what
probably
to do
me being a shitty interviewer is what's going on. I'm not letting you finish. Okay, go on. Answer the one from 2 questions ago.
No, it's me being a shitty guest because I'm not answering, and I get lost in a tangent. Yeah. So you asked me, what to do if Trump succeeds, and I'm like, well, first of all, what does a Trump success look like? And basically, I have, and I think we can agree on that, right? I mean, you need three things for Trump to really work: is negative real rate, a weak dollar, and weak oil prices. I mean, defining Trump's success as what I would call the impossible junction of a populist agenda and a stock market at an all-time high, which again, to me is the fundamental contradiction in Trumpism. It's either you're a populist or you get asset prices up, but you cannot have them both. But
completely agree.
Yes, but that's what was sold. I think that's the reason why he was popular. And for example, Bernie was popular, but why he was tolerated, because he promised, okay, I'm going to do the populist stuff. I'm going to take the mantle of the forgotten man of America, the forgotten man of and the American carnage and all that stuff. All that and at the same time, getting all the billionaires to line up and give him money. And to me, I still believe there is no reconciliation that if you're a populist, you're going to hurt asset prices. But how could it work? How could we have both Ohio booming and Wall Street booming? Negative real rates, weak dollar, weak oil prices. So that's kind of my long-winded answer to your question on is Trump dollar bull. I think absolutely not. I think for the MAGA agenda to work, you need a much weaker dollar, and every day that the dollar index goes up is a problem. I don't know what you think about it. Be curious. Today we had this announcement about the sovereign wealth fund. Maybe that's a tool to weaken the dollar. I was thinking, Like, because I'm always trying to think, because okay, you see all these takes on Twitter saying, "Guy, you're $35 trillion in debt." Like, don't. And yes, I get that, right? I understand that. Like, you don't do sovereign wealth fund when.
Yeah.
But I go, why is he doing it? Could be a way to have a vehicle to weaken the dollar. That was one possibility.
Well, let's walk me through that, because I guess I'm just not getting that connection immediately.
Well, I mean, the way the Swiss central bank does it. I mean, they have
they buy other people's assets.
Yeah, they buy they buy. So when the Swiss franc is too high, they buy German Bund and Max 7 stocks. And
yeah, I don't think Trump's going to be doing that. I hear your argument. I don't see Trump buying anything in the sovereign wealth fund except for U.S. assets.
Okay.
Yeah, like I understand that argument now. I guess I just don't see that. But maybe I'm wrong. Like, maybe you're right.
But it would. My point is that it would give, because part of the milkshake theory or argument is well, Vincent, Kevin, I understand everybody wants a weaker dollar. And
right.
It's true, right? The US want a weaker dollar, Brazil want a weaker dollar, the IMF, but the dollar just goes up structurally.
Right.
There's nothing you can do about it because there's no actual tool to weaken the dollar. That was my idea, that it could become
become a tool. Now, yes. This is my pushback to that theory. First of all, does it not sound like the exact same theory that the deflationistas gave us in 2018 and 2019? Back then, they said we can never have inflation. I remember, very successful hedge fund managers saying, we're never going to have elevated inflation again in our lives. And they told me about the 3 Ds. It was demographics, the debt, the amount of debt, and the disinflation from technology. And they said all these three make it impossible for us to make inflation. That was legitimately what people said. And I know everyone's forgotten it, but I, as a bond bear, I can attest I was accosted and told that I just didn't understand these deflationary effects. And my argument was always on the other side of this, is that with enough political will, you can always create inflation.
Yes.
And to me,
and we had the real life experiment that validated.
And to me, on the dollar, I feel like it's the exact same argument, that if with enough political will, you can create enough dollars to send it down. If the country wants the dollar to go down, they can create the dollars to send it down. Now, is there a cost? Yes, the cost is inflation. Are there all sorts of issues with that? Of course. And you could get into a situation where other countries, retaliate by them printing more dollars or printing more of their currencies. But I just don't buy this argument that it's impossible, because ultimately you are the sovereign issuer of your currency. Like, you are the sole issuer. If you want to do it, you can create enough dollars. Like, you could go and just revalue gold at $5,000 and say, I'm going to buy a ton of gold and I'm going to issue dollars against it. It doesn't matter. You just need to create the dollars. So I push back very hard on that theory that it's impossible for them to get the US dollar down. And I think that if Trump went and said, I'm going to do this unless you guys revalue it yourselves, I think it would get done. So anyways, that's my feelings on that. I don't know. Do you have any pushback or thoughts?
No. I mean, I agree with the whole premise to conclusion was entirely correct. So
now here's the next question. I'm going to put you on the spot. Do we, if we go back to the last administration, at this point, he was already tweeting about the dollar being too high.
Trump, you mean?
Yes. Sorry. Yes, Trump. And you mentioned that he hasn't mentioned anything about the stock market going up to the new highs. He also hasn't mentioned anything about the dollar yet. And I've been kind of surprised about that. Do you have any thoughts on that?
I mean, he's mentioned a few things on the Fed, right? Which is another way to go at it, right? If he bullies the Fed, he said rates are too high. And so maybe that's the way. My guess is, I mean, again, and we're dealing with a chaotic individual, and we may be absolutely overreading things, but my guess is that it's going to come later.
Yeah.
Now, even that that's for the second round, right? The first round was the little joke, right? The Panama, the Canada, the
Yeah.
Greenland, and then the real trade war is not going to be with Greenland, right? Is or Denmark. Is going to be with China, with the EU, with Japan,
Right.
and that they have this report, right? I think that the reason the sequence is probably, well, it's easier to punch Canada than it is to punch China.
Right.
So let's start with that. And then there was this with executive order, he can only do something based on national security. So he needs to tie to the border.
Okay.
Which is why he's kind of picked up the fight with and just focusing on these somewhat silly topics instead of, I mean, that's the big question, right? That's, I think, why we're pointing to in our conversation is this sort of like Mar-a-Lago Plaza redo agreement where and I think it's a very legitimate topic. Like, yes, the dollar is too strong. Now you could say that's by design, right? If you have a world reserve currency, you need to run constant current account deficit,
right,
so that the world has dollars in order to buy to trade together, and that guts your industrial sector. And I mean, it's legitimate for the US to bring that up.
Yeah.
And the US and then I mean, to me, the yen is the most absurd one. That would be the one I would.
That you'd go after the yen.
Trump,
you'd be like,
we have military bases there.
Yeah. I also don't think it would be that hard for the Japanese to get it up.
That too. They would want that too. So that's why I'd be bullish there. Yeah,
it's a win-win. That's a great point, actually, because a lot of the Japanese are frustrated with the lack of purchasing power of the yen and how they've had inflation, and it would be great for them to revalue it higher.
Yes. And that's a much easier way to solve the problem than throwing tariffs and threatening tariffs and all that. But so it's possible that this is how we end this bear market that I was talking about in 2025. Is we have a first phase where it's pure chaos, right? You got Elon tweeting weird stuff and cutting government spending and trade wars and threats, and the markets start to really kind of melt down, and then the adults get in the room. You get the Scott Besson, the blah blah. You get some sort of international conference, and then once everybody's been, it's like after a brawl, right? Then we can agree on
right. Okay, so we have to have the brawl first. I like it.
Yes.
You know what? Let's go back. I'll do a better job as an interviewer, and I'll remind you that we're going to talk about the 4 trades that you like in terms of, if MAGA is successful.
Yes. Yes. So, again, conditions for successful MAGA means that, so it's both Wall Street and Main Street,
right?
Especially Main Street in Pittsburgh or
Ohio or whatever.
Ohio, right?
The John Deere factory. This is the one that I like to use, because there's a John Deere factory that he says, I'm going to tariff you 100% if you move the jobs out of wherever it was. And so far they've actually just moved the jobs out and haven't listened to him. So it'll be interesting to see how it goes. But that's the John Deere factory is what I'm watching.
Okay. So that's success here. And from a macro standpoint, we have rapid US growth, a weak dollar, negative real rates, and lower oil prices. This is the alignment of stars that's conducive to this. So in this scenario, and I know it's not very original, but it would be long banks. That was actually my pick already from last year. But last year it was a betting against the recession, right? I saw everybody had recession bets. I see banks had the scars from the regional bank crisis, and then I thought, no, rates are going to stay higher. It's not that hard to make money when you can just you take deposits and you get 5% for leaving them more at the Fed. It was an easy trade. Now it's more of I think the trade would move more away from just making money from the fact that the world's not ending and rates are high, to having a proper 2000 like bull market insanity of just IPOs left and right, mergers. We're gonna have a
actually, on that topic, before you get off that, I saw in one of your reports you had this chart, this table of the IPOs over the years, and I was flabbergasted how bad it's been. I knew it was not good. I didn't realize how bad it was.
Yeah,
Like here,
we went from like, any given year you have 1 to 2% of the market issued as new stock, and
right.
now we're close to like 0.2%. So it's an 80% contraction in IPO. I mean, there was this brief recovery in 2021, but that was this kind of SPAC thing, which was, and then that just went to zero overnight. And that's, I think that's the transformation of the industry, right? Is the time to exit is way longer. Companies access pools of liquidity that are not the market, right? You used to do, Series A, Series B, and then IPO, right? And now you Series F,
Right.
and then you can find liquidity on non-public markets. Quite often you get better valuation. So
if you don't have to mark your book to market, it helps a lot. You can pay a lot more.
You don't have to disclose stuff you don't like to disclose. But so, and maybe that's just the way the world is now. We just don't need the stock market to raise capital the way we used it before. But my idea is that still the pipeline is longer, but the exit is the same. Right? At some point, all these VCs, private equity, will have to dump. I was looking at the private equity stats for in the past 3 years. For $2 that have come in private equity, only $1 was returned to investor, which you could think is kind of a Ponzi scheme. I mean, that's but no, it's adding value through.
That's right. Of course, they are always adding value. And to your point about owning the banks as a trade, we also have the secular theme of the deregulation.
Yeah.
And there's no doubt that the Basel III, which I think Trump and the Treasury Secretary have indicated they will no longer follow, they are going to unshackle the banks in a way that, and I think it's funny you mentioned 2000 because wasn't that when Clinton did it? I think
the
Glass-Steagall,
Glass-Steagall,
right?
I would have to check, but that's late 90s for sure. Yeah.
Yeah. I think it's very much the same. So that would be, I could completely see and very sympathetic to that. Okay. Let's move on to trade number 2. What's your next one?
So it would be airlines and refiners, basically the cheap oil trades, right? So for two industries, oil is a major input. It's airline and refiners. And when oil prices go down, the margins of airlines typically expand. The same goes for refiners. For airlines, you have the additional tailwinds that we would have. Well, that works for refiners too. You would have a very robust internal, people will be driving left and right and taking vacation and all that. So your costs are going down, your revenue and the competitive space in airlines is a bit better. I forgot probably one, but there's 1,000 jokes about airlines. Or I'm going to go with Richard Branson, right? How do you become a millionaire? You start as a billionaire and then you buy an airline company.
I actually haven't heard that one. I heard the one where Warren Buffett said, if I could go back in time and sabotage the Wright brothers, I'd save millions of investors tons of money and heartache by stopping the airline industry.
Yes.
So I completely get it. Okay,
they both point to the reality that airline has been a massive destroyer of capital over time because they're not very well run, and every time you have pricing power, you got new entrants, whether it's the foreign companies that enjoy subsidies or low cost, so your margin never lasts. Here it's looking a little bit better this year because we had all these issues at Boeing. That means that even if you wanted to disrupt, there's not the planes are not there. Okay. So that little moment of pricing power theoretically could mean that they would do well. So airlines, refiners as a bet on lower.
Okay, price. Number 3 is one that I love.
Yes, I'm sure you do.
I'm a Canadian. I'm forced to love these, but anyways, go on.
So again, let me just reset the condition: weak dollar, negative real rates, low energy. I mean that's kryptonite for gold miners. Obviously, I mean, at the end of the day, gold miners are in the process of converting oil into gold, right? I mean, you run expensive machinery to dig hole in the ground and then you get gold. So I think one reason why gold miners have been, they've not been told dogs, but if you look since COVID, basically stocks have doubled. Gold has now outperformed gold in stocks since COVID, but more or less gold and the S&P 500 has doubled, and gold miners have just flatlined.
Right.
And part of that was because we had this massive volatility in oil prices and periods of very high oil prices, which means that the margins of the gold miners were not that good, and also the valuations of the gold miners have dropped. I mean, or at least they have not risen commensurately with the rest of the market. So they're due for a catch up. If we have $3,000 gold, which could happen any day now, and $50 oil. Yeah, you don't have to.
Right. The best explanation I've heard about that is the fact that central banks buy gold. They don't buy gold miners. But eventually, I do think we're going to get an earnings kind of bump. Like it'll be so like the price of gold will make it so they can't help but make money. And then once we get like real good, positive revisions on the EPS, the pod shop guys, the quants, they're going to start chasing this, and it'll become the next rolling bubble. So I'm completely with you. And then finally, the fourth trade is another one I love. Why don't you explain to us what that is?
Yeah, so it's steepness. You and I have been, and ultimately we are right. We're just like 3 years early on that.
Yeah, that's what. And to be fair, it's one of these things that we can say we were right, and eventually it's going to work. But the reality is that this thing is carried negatively, so we've been actually wrong.
Right.
Yeah, and it's not till this last little bit that we've actually been right. And that's the thing that kind of bothers me about some people when they talk about these things. They go, look, you know what? Eventually the VIX went up. They don't realize that in the meantime, the VIX has been decaying every single day. And the steepeners is the same way. It's been carrying negatively for a long, long time. So it's really just this last move of the last, probably since the Fed started cutting.
Right.
That would probably have been the start of it, right? When they started cutting, that it finally started to work. And the steepener trade started beating the forward steepness, meaning that it was actually moving up than what the forward curve had already priced in.
Yeah.
But don't you think it could get to record wides? That's my call. I still think we go to record wides.
I'm not there yet, but I was making a much more modest case here that most of the steepening we've had has been obviously from the long end finally catching up, and if we have this scenario that $50 oil and inflation comes back to 2%, and then we would see the Fed cut, and then we would have we would start. But again, the long end would not drop because everybody would be so enthusiastic about the Trump miracle, and you'd have a kind of natural upward sloping yield curve of the 90s.
Yeah, I'm with you. I completely agree. All right, this is a problem with you, Vincent, is that you and I, too much of us just overlap. I just laugh and stuff like that. One of the things that you're really smart on that I should probably start paying more attention is watching the tax remittances. Mm-hmm. And you had a comment the other day about the California wildfires. And why don't you explain to us what that might mean and just how that works in terms of affecting the market?
Right. So that's going a little bit against the case I earlier made that we're going to see fiscal contraction in 2025. Because of the fires in the LA counties, they postponed the tax filing date from April 15 to, I think it's somewhere in November. Okay. I don't think it's all of California. I have to check for me, but I think it's just but it's still like, I mean, this is
a lot of people, and there are people that are wealthy.
A lot of industries too in LA. I think people don't realize that you have a lot of manufacturing.
It's not just certain counties.
No,
in LA,
it's not
the
just
entire
Hollywood and porn. If that's what you're.
Okay. So it's just everyone has a delay until November 15th, and so this means that technically that money that was usually coming out of their jeans to go pay stays in their jeans for an extra 6 months.
And that's, I mean, if we go with our basic, public sector deficits, our private sector profits, that just means that people are going to keep their money for longer. So that's the same story we saw in in 2023 when we had the big floods. 2023 we had these very big floods in Northern California. There they gave the entire state, which is a bit excessive in my opinion, but this was the election year and who knows what
Yeah.
was whatever, right? I mean, but yeah, in California, if it's too hot, we don't pay taxes. If it's too wet, we don't. So anyway, but that contributed also to the bond market. Remember, this was a terrible year when everybody became a quarterly refunding announcement expert. And
Oh yeah.
right, and then that comes, I think, at the end of every quarter. And then there were a couple of misses, right? They announced like, oh, we're gonna have to borrow more.
Yeah.
And then when they tried to put it at the long end, like that, we had these massive sell-offs, like almost emerging market like. And part of the reason for this outsized refunding announcement was that 25% of the U.S. economy was not paying taxes.
Right.
So
Okay.
what the Treasury had budgeted was completely off. So that might happen again this year, and that would be if we go back to this kind of steep in the trade, that would be a reason that we would be hit with high deficits because Californians are not paying taxes. Another thing, I just updated my tax collection because I do it every week religiously, and I go to this day treasury statement. You can download it every day, and you really see the treasury general account broken down, every spending account, every debit account, and so two things struck me. One, it is still very strong, man. The
tax collection.
It's still really, really strong.
So the economy, implicit in that, you're saying that the economy is still stronger than people think.
Yeah. I think so, or maybe not stronger than people think, because
but at least
I feel like maybe it's going, before the economy was stronger than people think. Now the economy is as strong as people think, and then it's going to be so.
Okay.
But I don't think we are at the negative growth surprise points yet. The other thing that I thought was interesting was that the part that was really that increased the most in January source of revenue was customs.
Okay.
And obviously it's not the tariffs, right? Because if I understand correctly, so Canada and Mexico are not paying, right? You guys have another 30 days, but then China is starting today, right? Or
I'm not sure when China's starting, but I do believe that he's upping it more. But I'll tell you this, Vincent, I think that there was and you saw this in the trade deficit number,
right,
that blew the doors off, meaning
Correct.
that there was a huge amount. I think that there was a lot of people stockpiling in anticipation of higher future tariffs. Like our buddy Cuppy, he bought a whole bunch of, he went and bought himself a whole bunch of solar panels because he's like, I need to buy these. I'm going to rush them ahead. How many people went and just said, I need to buy this. I'm going to rush it ahead just in case it goes up later.
And that's exactly where I wanted to go is when it comes to inflation and the February and March. I don't think we need to wait for the actual tariffs to see it show up in pressure in core goods prices, because people anticipate these things, and even if the tariffs don't happen for whatever reason, we'll still see the upward pressure on core goods. And then we haven't talked much about inflation, but that's part of my late Q1 bear market story is we realize we get this sticking, and the inflation at this point is a tug of war, right, between shelter that's coming down and core goods that's coming back up. And if we see more of that behavior of retailers or anybody who needs to buy stuff from China or any country in this world, then we'll see this upward pressure before the tariffs are on. And it also speaks to the I think the stagflationary effect of tariffs, because in the grand scheme of thing, like I'm not sure that tariffs are all that bad. I mean, whatever. At the end of the day, you got to raise revenue for the government one way or another, right? So the whole point is like, well, tariffs are okay. Well, what's your alternative, right? You're going to tax income. You're going to tax work. I mean, taxing work, you didn't have a work. You're going to tax profit. So whatever you do, you're going to cause some sort of pain, right?
Right.
But with tariffs, I think that the cost is in this kind of uncertainty, and certainly I'm going to have more. I'm going to need to have more inventories, and you have to move things around, like you move the supply chain from China to Mexico, from Indonesia to Vietnam, or whatever, and that's that friction that creates inefficiency, and I think we're already seeing it, and one part that I think it's hidden cost of Trumpism is, if we go by the notion that Trump is just a strategic guy, he wields the threat of tariffs, but his bite is not as bad as his bark. He's just using it to extract concessions from people. And at the end of the day, he falls and nothing really changes. He's just obtained that the Canadians have a border czar now, and the Mexicans have
a fentanyl czar. I don't think we have a border czar. We have a fentanyl czar.
Fentanyl czar.
Okay.
What a cool title.
He does a lot of sleeping. Anyways,
so the view that well, it's costless, right? We threaten them. We don't have to actually exercise the threat, and we get what we want. Yeah. It's not pure benefit, because you've created a certain amount of uncertainty in the economy, and then some people have changed plans, and you make the economy less efficient. So that's one of my issues. This model of Trump as this like genius, out of the deal type of guy that will just squeeze people's arm but never break it. No. The volatility and the uncertainty of tariffs is enough to create a distortion in the economy that will contribute to the stagflation.
So I've written that exact same thing, Vincent, and that was going to be my next question. Do you think that could contribute to the slowdown? Because I'm 100% in that camp, and as Canadians, I can tell you that at the very least, he's going to help cause a recession here. I don't know if he's going to do anything in the States, but he's definitely going to do it here. And if he does this throughout the world, it'll be one of these situations where, he could theoretically at the margin cause the whole world to slow down, because everyone's sitting around waiting for what Trump decides.
Yep.
Right. Yep. Okay. Vincent, you go around the world. You talk to a lot of smart people. What are they asking you? And what question should I have asked you about that I missed?
On my most recent trip, I was surprised by the amount of questions I got on Doge, and I was cynical, kind of like you, thinking it's just something that's on Twitter and that never really exists. And I loved your idea that he's setting up Musk to be the fall guy, and have him. I mean, it's fantastic, right? In politics, no one wants to be ever cutting, and here you got a guy. I want to be the face of it. You go for it, man. Just go.
Like he just in Musk has walked right into it. Trump is shrewd that way. Anyways, I'm with you.
Run the landmines for me.
You go first, Elon. Okay, so you got a lot of questions about it.
Yeah, a lot of people are wondering if that's if that's a real thing, and people are saying, how much cutting do you expect? And nothing. I didn't. So. And maybe it speaks to the power of Elon. Is he can change the reality field around him, right?
Right.
Or maybe it's. I think it's. Do you think at all that we are at a moment where the social contract is being kind of somewhat redefined in different countries, and like with Millet and with the crisis in Europe, like we really have to, completely rethink how government operates, and we're going to have an age where we're going to completely basically axe entire levels of government. Because I think that's why people were asking this question. People see this fiscal crisis building, and they view that as something that's got to happen one way or the other.
You keep asking me questions, Vincent. I'm supposed to be asking you, but I will quickly say that I do believe that priorities amongst people have changed. Whereas in the past, there was a lot of, making sure you had the right social, like ESG, for example. Mm-hmm. ESG has gone completely out the window. And right. I can say as a Canadian, all of a sudden we're like, let's make all the pipelines we can because we need to, because we can no longer rely on this, and we don't have the privilege of doing that. And I do believe that I don't know if I would go so far as to say the social contract is changing. I do believe people's priorities are changing, and that they realize that the governments that didn't pay enough attention to economics and were too busy worried about other social things found themselves out of power. And for example, the left needs to reevaluate why they lost. Instead of blaming, they should really go and like stop and think about why they lost and change their things. Like I was going and I thought this was really interesting. I listened to Bob Lighthizer because this is somebody that Trump models a lot of his policies off of. And I went and said, okay, if I'm going to, if this is what Trump is basing a lot of his trade policies on, I better understand him. So I went and listened to a speech he gave or an interview. And I was like, this guy sounds like a 1960s Democrat. Like he doesn't like it's kind of shocking to me that this was a right wing, like what we can be considered a MAGA type individual. And he was, talking about policies that would previously have been, Bernie Sanders and stuff. So I do think that there's things of that nature that have changed. Now I'm going to stop there because again, I'm not the one that I should be asking you questions. What question should I have asked you that I forgot, Vincent? Like what's on your mind?
I'm going to keep responding to the prior one. Okay. And another thing that I thought was interesting is to your questions was StoneX. My firm recently did a joint event at the CFA Society in Miami with Louis Vincent Deluard, who's a common friend, so we split it. Basically, I was doing my U.S. fiscal thing. This was before the election, right? And
okay,
the U.S. is stronger than you think. I was talking about the gig economy, the tax receipts, and usually this is very kind of conflictual. I always get a bond guy that throws some deflation crap at me, and then Louis did his thing on China, and he's obviously the best China mind that there is, but I know that he for a long time it was difficult getting interest, right? All he was getting on the China is like, well, it's an investable, blah blah blah. And the reaction was just the complete opposite of and maybe it's because he's a more charismatic guy than me, but it was just like I thought what I said just flew straight in as if I said, oh, the sunrise in the east and water is wet. And the amount of interest, and it was an interesting crowd. Miami, you get kind of more like LATAM private banker type of crowd, and they just wanted to really pick his brain on and he did fantastic, of course, on China, and I thought that was interesting. That I think that Chinese stimulus kind of changed the perception. And the reason I bring it up to finish the interview is because it might be one of the surprises for 2025 is that the China stimulus ends up working and people start to see the US as the place that's uninvestable, where we see this kind of erratic policy moves and on the other hand, people start looking at the world, and that may even benefit Europe for that matters. I actually, for the first time in 15 years, and I remember we talked about this. My default was always, no, don't be bullish Europe. You want to have a job. But I'm almost starting to see a case where maybe in 2025, people will look at the things that they threw in the trash as garbage. Oh, China is unlistable. Europe is nothing grows there, and they actually look at it like, so that would be. I think
you mean buying an index at 23 times next year's earnings isn't as attractive as buying something at 12 that's growing almost as much. So listen, last time before I let you go, I did promise you I'd never bring up that TV show, but will you allow me to talk about it? Okay, thank you. I haven't watched the third season. Have you?
I have not. The only thing I read is that it's in Rome. So okay.
So neither one of us
have to bring it up to the.
Yeah. Well, listen, we haven't talked about what it is yet. So this is our deal. We'll both go watch it, and then we'll meet back and we'll have another show and we'll talk about it. For those who don't know, it's Emily in Paris. That Vincent admitted on one of our early episodes that he actually liked, and Louis Vincent Gave, who's also French. They're both from France. Was ready to disown you as a Frenchman.
I don't know. I mean, I think she's doing a lot for saving what's left of the French economy, and as a French nationalist, we need to convince every pretty 20-year-old Instagram influencer that her destiny is in Paris and buying overpriced dinner and lunches. And this is our main export. So don't attack that, okay?
Someone told me once that in Paris they put up signs in the spring saying the tourists are coming. Please be polite to them. Is that true? I don't know if that's true or not, but that's what someone told me.
It doesn't work.
Okay, on that note, Vincent, why don't you tell people a little bit more about you and yourself, where they would find your research and who you cater to and how they would reach out and find these terrific reports that we've been referencing today?
Thank you very much. So I work for StoneX, which is a big institutional broker-dealer. I'm in the securities group, write global macro reports once a week. Give conferences. It's a very fun job. I get to meet a lot of very smart people. And then, so the best way really is to, if you are a client of StoneX, just ask your rep, hey, I'd like to get Vincent stuff, and we'll make that happen. If you're not, Twitter, X, whatever you want to call it these days, at Vincent Deluard, Deluard, and then under my pin tweet, actually, I think I have a recording of our last interview there.
Oh, really?
One of the ones we made. Yes.
Okay. Wow.
One of about the imaginary recession. So here you go. This is how proud I am of that call that we both had on the US economy. But yeah, I have a pin tweet, and in that there is a link for a free trial. We give them to everybody, and then if you have any issues setting it up, DM me. I'll answer you. And I've met fantastic people on Twitter, and I hope to keep doing that.
Well, that's terrific. Thanks very much for coming, Vince. It's always a pleasure having you on.